What will Nigeria's oil story be in 2026? I think we already have a clue. Brent crude opened the year trading at $64 per barrel, just slightly below Nigeria's budget assumption of $64.85. This gap looks minor, but it has quietly set the tone for Nigeria's finances going into the year. We saw a version of this in 2025. Oil prices moved in cycles. Supply stayed high, demand remained uncertain, and even major geopolitical crises failed to keep prices elevated for long. Nigeria produced an average of 1.6 million barrels per day, an improvement from previous years and closer to quota. Yet, revenue gains were muted because prices consistently hovered around or below budget assumptions. Now, heading into 2026, the global picture looks even more constrained. Venezuela crude is gradually finding its way back into an already oversaturated market. Trade tensions and policy uncertainty are weighing on growth expectations, and markets are pricing cautiously. For an oil-dependent economy like Nigeria, this matters. When oil prices sit below budget levels, government revenues tighten, pressure on the naira builds, and borrowing costs rise. Over time, citizens are the ones who feel it through inflation, weaker public spending, and reduced purchasing power. So the real question is this: how can you protect your wealth in a world where oil can no longer be relied on to stabilize the economy? We answered this crucial question and more in this week's episode of Private Connect.